So, Jonathan Ruiz, your accounting coach, survival tips. So, this time, what I would like to do is share with you a lesson for financial accounting and reporting. So, our topic will be about cash. Okay, so this is a very important topic. So, and then what I want you to do is, of course, if you want more lessons like this, you need to subscribe on this page and in my Instagram page. Okay, so you need to follow my account, especially if you are on Facebook, then you can go to my Facebook page, Jonathan Ruiz or CPA Dreams. Okay, so moving on. So our agenda is cash and cash equivalents. So you will learn the definition of cash and cash equivalents. They are separate uh, topic actually and separate. They have different meanings, no, but they are one line item in the balance sheet. And then we are going to give some examples of cash and cash equivalent items. Then I will give you the measurement and recognition. Okay, so what we are waiting for, let's start the lessons. Now, what is cash? Okay, in layman's term, no, very popular meaning is it simply means standard of exchange, medium of exchange. This is the currency, coins are in circulation or the legal tender. In the Philippines, it is the peso. Okay, but as per accountants or accounting definition, cash includes money and other negotiable instrument that is payable in money and acceptable by the bank for deposit and immediate credit. There is also a definition on PAS 1, paragraph 66, referring to unrestricted cash. This is provides entity that can classify an asset as current when the asset is cash or cash equivalent unless it is restricted from being exchanged or used to settle a liability for at least 12 months or after the end of reporting period. Okay, so meaning cash has a broader meaning, has a broader meaning, and it connotes more than money, and money or other negotiable instrument that is payable in money and acceptable by the bank for deposit and immediate credit. Again, so what are the items to be considered as cash? So we have cash on hand, we have cash in bank, and we have cash fund. Okay, so these are three items. So what are the example of cash on hand items? So these are undeposited cash collections. So meaning these are coins and currency. This is your cash on hand. We have also cash on hand items, customers checks, cashiers or managers checks, travelers check, bank drafts. So meaning these are easily convertible into cash. And we have also money orders. Okay, now looking for cash in bank items. So these are those demand deposit or checking account, savings deposit. So these are your cash in bank or your account in the bank. Okay, now what are the cash fund items? Okay, so these cash fund items, we have petty cash fund used for small disbursement. So this is handled by the petty cashier, petty cash or cashier or custodian. Then we have also the payroll fund. Of course, this is set aside already for the payment of payroll. And then we have dividend fund for distribution of dividends. Again, these are short-term fund for current operations. These are within the normal operations of the company. So these are good examples are payroll fund, petty cash fund, dividend fund. But we also have like travel fund, tax fund, okay, interest fund. So what is cash equivalence? So in this illustration, you can see from the cash on hand goes to the bank, and then from the bank can be converted into cash equivalents. Again, cash equivalents as per PES 7 paragraph 6 short-term, highly liquid investments that are readily convertible into cash. So near their maturity, they present insignificant risk of changes in value because of changes in interest rates. Okay, so these are readily convertible with maturity date. So what are the examples? Again, I just want to emphasize the standard states that only highly liquid investments that are acquired 3 months before maturity can qualify as cash equivalents. So the determination will be the date of maturity, even if it's purchased 3 years ago. So we go for example. We have 3 months BSP Treasury bill. We have 3-year BSP Treasury bill purchase 3 years ago, but 3 months before the maturity date. We have also 3-month money market instrument and 3-month time deposit. Again, these are 3 months. So meaning these will be classified as cash equivalents. So what are the sample of non-cash items? Okay, so we have restricted foreign deposits. These are designated as receivables, either current or non-current, subject to any allowance. Postage stamps. This is an office supply. PDC receive, IOUs, and NSF checks. These are receivables. Again, these are non-cash items. I want to give you also a note, a special note. Equity securities cannot qualify as cash equivalents because shares do not have maturity date. Okay, but there is one part of share, which is preference share, with a specified redemption date and acquired 3 months before redemption date can qualify as cash equivalents. Again, ulitin ko lang. Preference share, which is specified the redemption date and acquired 3 months before redemption date can qualify as cash equivalent. Now, what is the rules of debit and credit in terms of cash? Debit, this increase cash, so it means increase in asset. Credit, so this means decrease in cash, decrease in assets. Let's go to recognition and measurement. Cash is recognized when transfer of resources takes place. Example, upon receipt. We have a general rule. Cash in foreign currency, of course, it is recorded at current exchange rate. Cash in financial institution, which is in bankruptcy or other financial difficulty, at the lower or estimated realizable value or face value. Okay. Now, so we learned the definition, the example of cash and cash equivalent items, and then measurement and recognition. So I hope you learned something about cash and cash equivalents. These are always part of the CPA examination. So please do master this topic. For our next topic, I'm going to discuss about petty cash. Okay, so maraming salamat. Thank you for subscribing in my YouTube channel and thank you for sharing and liking my FB page. See you again on our next topic.